Is the condo market about to crash? With inventory skyrocketing over 80% in the GTA and sales plummeting, many people are asking if now is the time to panic or to pounce. Stick around and find out where the market is heading, right here, right now. Hi, and welcome back to Everything Toronto. And for those new to this channel, I'm Renna, a local real estate broker right here in Toronto, Ontario. And I specialize in helping clients from around the globe relocate to, from, and within the Greater Toronto Area. Today, we're diving deep into a hot topic that's been making headlines: the GTA condo market. Over the past few months, we've seen some pretty dramatic shifts in this market. From a jump in condo inventory by over 80% to sales hitting rock bottom. This market is definitely in flux. Overall, the condo market is experiencing some serious challenges. Inventories are piling up and sales are slowing down. And prices, well, they're starting to feel the pressure. For many investors and homeowners, this could raise a big red flag. Could the condo market be on the verge of a major correction? And if so, what does this mean for buyers, sellers, and investors? Let's break it down and explore what's actually causing this shift. First, we've seen a surge in condo inventory. According to TREB's Market Watch report, June saw a year-over-year increase of 83.61% in resale units available on the market, from 4,796 active condo listings in June of 2023 to 8,806 in June of this year. July also saw an increase of 63.94%, from 5,416 active listings last year to 8,879 this year. But the resale market isn't the only problem. Over the past decade, developers have been building new condo projects at a record pace in order to keep up with the booming demand for urban living in Toronto and the GTA. However, this wave is now cresting at a time when the appetite for new condos isn't as voracious as it once was. So the question is, why? Why has this frenzied demand now suddenly simmered into near nothing? Well, there are several factors at play here, each contributing to the current landscape in very unique ways. One reason is rising interest rates. With the Bank of Canada frantically hiking rates over the past few years to curb inflation, from 0.25% in January of 2022 to its peak of 5% in July of 2023, mortgages have become drastically more expensive. This has had a direct impact on the housing market by putting a squeeze on affordability, especially for first-time homebuyers. The reality is that the days of ultra-low interest rates are behind us, and with borrowing costs up, more people are deciding to sit on the sidelines rather than jump into the market. Another factor is the uncertain economic outlook. The global economy has been on a roller coaster, and Canada is no exception. We've seen fluctuations in employment rates, inflation concerns, and economic slowdowns, all of which contribute to a less confident buyer base. Investors, who have traditionally been a strong force in the condo market, are now facing challenges of their own. With rental yields shrinking over the past year and carrying costs rising due to higher interest rates, many investors are finding that the math no longer works in their favor. These once hot income generating investment properties are now becoming liabilities for some, leading them to either sell off their units or hold back on new purchases. Another factor contributing to rising inventory is the shift in buyer preferences. The pandemic has fundamentally changed how and where people want to live. Many buyers are now prioritizing more space, access to nature, and work from home amenities. And as a result, the demand for condos, particularly those smaller units in densely populated areas, has withered away. Buyers who might have been looking for condos just a few short years ago are now considering townhomes and semi-detached homes instead. They'll even consider moving to suburban or rural areas if the prices of these townhomes and semis in the GTA are out of reach. This shift is leaving more condos unsold and adding to the growing inventory levels. But it's not just about interest rates and shifting preferences. Let's talk about the broader real estate market dynamics. Both the Toronto and the GTA real estate markets have been red hot for years, with prices skyrocketing and bidding wars becoming the norm. This has led to a situation where many condos, and especially those in prime locations, are priced at a level that are simply out of reach for the average buyer. As prices have climbed, so too has the need for larger down payments and higher income levels to qualify for mortgages. In effect, this has excluded a significant portion of potential buyers from the market. Investor sentiment is also playing a crucial role. Many investors are growing increasingly cautious, if not outright bearish about the condo market. With concerns about overvaluation, continuous interest rate hikes, and a cooling market, some are choosing to liquidate their holdings or pause their investment plans entirely. This shift in investor sentiment is removing a key support pillar that has historically propped up the market during slower periods. Finally, let's not forget about the impact of government policies. The federal and provincial governments have introduced various measures aimed at cooling the housing market and addressing affordability issues, like the foreign buyer ban and the anti-flipping tax, which you can learn all about by watching this short video above. But that's not all, because these measures also include tighter mortgage lending rules, changes in capital gains tax, and rent control measures. While these measures are intended to stabilize the market and make housing more affordable, they also contribute to the current slowdown by reducing speculative demand and making it harder for some buyers to enter the market. All these factors combined are creating the perfect storm for the GTA condo market. Rising inventory, shrinking demand, economic uncertainty, and shifting buyer preferences are all putting significant downward pressure on both sales and prices. Or is it? In the GTA, the number of condo sales fell 28.37%, from 2,122 units sold in June of 2023 to 1,520 units in June of this year. But when it comes to prices, it's not as big as a dip as everyone claims it to be. In that same period, the average price for a condo in the GTA only dropped 1.56%, from $739,395 to $727,861. And if we drill down even further to isolate the city of Toronto, year-over-year sales has dropped 29.4%, but the average price for a condo dipped a mere 0.9%. But the slight dips in average prices may not last, because with fewer buyers in the market, condos are sitting unsold for longer periods. This is known as average days on market, and the number is getting bigger and bigger. In June of last year, it took an average of 18 days to sell a condo in the GTA. In June of this year, the number increased to 27 days. This effectively creates a buildup of inventory, which in turn puts more downward pressure on prices. It's a classic case of supply outstripping demand. So we should see significant downward pressure on prices in the near future. So as you can see, the condo market is definitely struggling. It's a complex and evolving situation that requires careful analysis and consideration for buyers, sellers, and investors alike, as the impacts of all this will definitely be felt in both the short and long term. In fact, the impacts are already being felt. So much so that multiple condo projects throughout the Greater Toronto and Hamilton area have been put on hold. 76 projects to be exact. This is an enormous number of projects to suddenly be put on hold. And if you want to know what happened, watch the video linked above and I'll go through all the details. So it's obvious that our condo market is facing some serious headwinds. We've got a massive increase in inventory, falling sales, and growing economic uncertainty, all of which are contributing to the cooling of the condo market. And for current owners and investors, this could mean a dip in property values. While for potential buyers, it might just signal a long-awaited opportunity to get into the market at a more reasonable price. However, this doesn't mean the condo market is about to crash, in my opinion. Both Toronto and the GTA remain as highly desirable areas with strong long-term demand. Yes, in the near future, prices will see a major correction, offering opportunities for savvy buyers to enter the market. And investors may face some challenges in the short term, and many will decide to exit. But those with a long-term perspective will likely stick around to see a turnaround and growth as the market stabilizes over the next 5 years. So now I'd like to ask, what do you think? Is the condo market headed for a major correction? Or is this just a temporary blip? Let me know your thoughts in the comments below. And before I leave you, just a quick reminder that if you're thinking of moving or you just need help figuring it all out, reach out to us anytime. Every day we get calls from people just like you planning their next move. Whether you're moving to, from, or anywhere within the Greater Toronto area, we've got you covered. Our team is dedicated to providing tailored solutions that match your needs and timeline to help make your move easy and stress-free. So if you're planning a move, feel free to give us a call, send us a text, or even drop us an email. Thanks for watching, subscribing, and liking this video. And don't forget to tap that bell. Thanks again, and I'll see you next time.